Welcome to the Fear and Greed Business Interview. I'm Sean Aylmer. Fear and Greed is working with the team at trading platform moomoo on a series for investors. Every Friday, we're bringing you an episode exploring how to use technology and data for smarter investing. Today, it's all about the Stock Screener, a tool that lets you analyse stocks and single out the opportunities within thousands of stocks on global markets. Remember, the information in this episode is general in nature and doesn't take into account your own circumstances. Michael McCarthy is the Chief Commercial Officer and Market Strategist at trading platform moomoo, which is a great supporter of Fear and Greed. Michael, welcome back to Fear and Greed.
Great to be back again. Thanks, Sean.
I'm delighted about this topic because it always makes me wonder how you can get your head across so many companies in the investing sphere. Start with the basics. How does Stock Screener work?
The way it works, Sean, is that we give you a whole lot of criteria for you to select from. Now, the reality is that different investors and traders use different methodologies to select what they see as the best market opportunities. Some people use fundamental analysis. Some people use only technical analysis. Some people prefer financial information or valuation measures to select their best option in the market. Some people like to combine two or more of those categories. So there's a whole lot of different ways for investors and traders to select their stocks. But the screener works through a logical process so that each person can determine what's the most important criteria for them, select it, and then look at the stocks that fall out at the bottom of the screener to see what's suitable for their choice on that day.
Okay, so can we just run through some of those? So if that was me coming to it, I'd think, which ones should I be worried about? Which are the criteria I should pick up? There are a few terms like technical analysis. That's kind of a black box to most of us. What are you talking about when you talk about technical analysis?
By technical analysis, I mean chart-based analysis of the price action of a stock or an index. So we have a look at the chart and we use the information on that chart to determine whether or not a stock is an attractive proposition. And there are many, many different indicators used on the charts to determine that.
Okay, and so part of that might have been what it's traded before. Part of it might be around its valuation, its price to earnings valuation. They're the sorts of things in technical analysis, Michael?
Well, in technical analysis, we'd be looking at things like trends, areas of support and resistance. We'd be using indicators to determine whether stocks are overbought or oversold. We'd be looking at previous price action to see if it's a good level to be entering or exiting a stock. And there are many, many different ways to do that. There's all sorts of indicators, and we could get into some of the more complex ones like Bollinger Bands or perhaps a MACD. Most of them sound more complicated than they actually are. And a quick read of the definition of any of the technical indicators on the moomoo platform should give investors and traders a good idea of what they can be used for.
Okay, great. So then I mentioned price to earnings. That's more of a valuation methodology. So that's another criteria.
That's exactly right. And in fact, if investors go to the screener on the platform or in the app, they'll see that these categories are laid out in a logical order. And if they follow the order that they're laid out in, you can often determine the most important criteria. So the first section we have is quotes, and that's about the company itself. And we start by asking investors to define their universe. That is, select the exchanges that they'd like to screen. So if you're an Australian-only investor, perhaps you pick Australia. If you're looking at Hong Kong and Australia, you could pick both. Or if you just want to see what potential there is in US trading, you can also select the US exchanges. So whichever your preference, you start by defining your universe. Once you've done that, you can start working through the quotes criteria and things like the market capitalization. In other words, what the market is saying that company is worth can be an important criteria. Some people like to deal in the biggest stocks only, the largest, the most liquid, most valuable stocks. Others prefer to look for opportunities in smaller stocks. So defining, the market capitalization of the companies you're looking for can help in that. And we then work through a whole number of other criteria based around the characteristics of the stock. Things like the whether a stock is at a new high or a new low, what its free market float is, what the turnover is, whether or not it has high volume. All of these can be used as criteria to determine if this is a stock that you'd like to see information for. And that's all in the quote section. The next section is the technical analysis section, as we mentioned. And then you've got all the chart-based signals, the things that we touched on, like MACDs and Bollinger Bands, but there's also moving averages, there's RSIs, there's a variety of indicators that are very popular with investors and traders that can be used in the technical section. The next section is the valuation section, and that once again goes to the price to earnings ratio, for example, or the price to book ratio. These are ratios that many investors use to determine whether a stock is expensive or if it's cheap. And those who favour those sorts of measures can also add that criteria to their screener. And then finally, we get to the financials section where people can look at some of the fundamental aspects of a stock if that's the way they select their stocks. And we're talking here about things like return on equity. We're talking about margin. We're talking about net income. So these measures fall into different categories like the fundamentals, the profitability of the company, its dividends, its liquidity, its solvency, its efficiency, whether or not, it's converting cash flow to profit. And then there's growth criteria. So as you can tell, Sean, I haven't even touched on half of the potential criteria here. And yet there's many, many choices here depending on the individual's preference in selecting stocks.
Stay with me, Michael. We'll be back in a minute. My guest this morning is Michael McCarthy from moomoo. Okay, so then the next step, and this is kind of the one that I really like because sometimes there's so much information, I'm not quite sure where to go. There are also recommended screeners. So there's the Warren Buffett strategy, for example. There's like undervalued semiconductors, undervalued banks, high div stocks. I think that is very helpful because for many retail investors in particular, you don't have time to sit there. And a day job isn't to go through and in fact, high net worth family individuals, high net worth family people as well, like to actually have someone to give you a guide on your strategy is important.
Well, that's right. And some investors only use those pre-created screeners rather than construct their own, particularly because those screeners have been selected and built to meet some of the most common questions. We touched on the fact that there's a dividend screener. A lot of longer-term investors are looking for higher-yielding stocks. And we've already created a high-yield screener so that people who are in that category simply can use the pre-built screener rather than constructing their own if they prefer. Many investors start out that way using the pre-built screeners, and as they become more experienced with the use of it, start building their own.
Okay. Now, one of the great advantages of this is that my investing universe can grow. So I know a lot about ASX stocks. I know a little about Wall Street stocks, a tiny bit about Shanghai and London. But this tool means that my universe can grow exponentially, I suspect, Michael.
That's right. Once again, we've created a logical structure, and the underlying principle here is diversification. Diversification is a risk management tool that all of us can use. Some risk management tools are only available to the most sophisticated investors, but all of us can spread our risk and offset our risk by diversifying across not only industries within a market, but across markets and across countries. So being able to select stocks in markets we're less familiar with is a very powerful step towards a better level of risk management.
So last week, we talked about the use of AI in the moomoo platform. How does that marry into what we're talking about now with the stock screeners? Because a lot of the things that you've been talking about are investment concepts that have been around for a while. But how does AI marry into this?
Well, let me be very clear. Investors don't need to know anything about AI to use the screening tools. But underlying the searches that are part of the screening process is a lot of AI process. And so, for example, simply the ability to scan so many different criteria at once is a result of the artificial intelligence tools that underlie the moomoo platform and app. So it's working away. AI is working away in the background to help you whenever you use a screener.
Michael, I have to ask you, what's your screener? Putting you on the spot here.
Well, I've as a 4-decade veteran of the markets, Sean, I have used many different screeners. But the one I use on the moomoo platform at the moment is the options screener. Now, this is not for everybody, but for those who have the experience and have had the time to study markets and the instruments available, the options screener is a very powerful tool in identifying short-term options trading opportunities. Now, as I say, this is not for everyone, Sean, and I'm at the more sophisticated end of our user base.
Yeah.
But for me, the one I'm using right now is the options screener.
And I suppose the point of that is that depending on where you are in your investment experience, you should actually be using the appropriate screener for you. I wouldn't use an option screener myself because I don't understand enough about it. You would. But the point being, use what's appropriate for you.
Absolutely right. So for completely new investors, there are pre-built screeners to get them started. For those who've been trading or investing for many years, they can go to the level of sophistication that matches their skill levels in the market. And so you're absolutely right. There's something for everybody in the screener choices.
Michael, thank you for talking to Fear and Greed.
It's been a pleasure. Thank you, Sean.
That was Michael McCarthy from moomoo, a great supporter of this podcast. For more information on the moomoo platform, follow the link in today's show notes for this interview. And remember that information in this podcast is general in nature and you should get professional advice before making any investment decisions. You've always got to make sure that the product is right for you. This is the Fear and Greed Business Interview. Join us every morning for the full episode of Fear and Greed, daily business news for people who make their own decisions. I'm Sean Aylmer. Enjoy your day.